Good morning. Hey, Kitty. So yesterday we got for myself what was the unexpected. I remember yesterday morning when we were viewing, I'm starting with SPY today. Um, we looked at the different instruments and which ones may have the better opportunity with a bias that could potentially go somewhat higher. And the spiders were the least attractive, but the pattern, this wide range bar that had formed there across the indices, suggested the ability to go through it, but we really wanted some consolidation from the run up. And we had also talked about the void concept, how the wide range bar created the void. And I jokingly said, from the other point of view of, you know, if things go the wrong way and I drew a big red candle thinking this is highly unlikely to happen, and it happened. And so there it is. Big red candle that not only went through yesterday's low, it kept going. And then, those of you in the room, we patiently waited for it to get down to the 50 MA, and it approached a little further below there, a trader pivot line. I don't know if I have it here. Anyway, maybe on the 15-minute chart. Um, it was down, but a little bit down below, and it flipped up above that, and then we got that little counter trend rally um, into the end of the day. So where do we go from here? It's always the question every day. Where do we go from here? Um, well, from a generally speaking point of view, we'd like to see the volatility and the ranges contract, because without that happening, we're just in a high volatility, erratic, uncertain environment where prices whip back and forth. And that's all that's happening now. So prices are, and let's just call it a correction of some sort. Whether it eventually rolls over to the downside is yet to be seen. We can see things are kind of inching up a little bit here pre-market, um, sort of in the middle of the range, somewhat in the middle of the range. And you can see these overlapping bars right here. This is on the spiders. Let's just call it the line in the sand to see whether prices can get back above that. So everything is applicable in all time frames, all concepts apply to all vehicles and time frames. So yesterday, the wide range bar in the void that it created, by going up. Let's go and look at this chart. The void that it created going up, well, prices come down to support, and now there's a void up above. Now, it would be crazy, but could it go all the way back up there? No, of course, we know anything can happen. And so that's what we would call a bear, right? Red bar, bear sandwich. So this is a bearish 180. And if we were to get a green bar back up again, bearish bar in the middle, bear sandwich. And as insane as that would be, it would imply buyers regrouped and said, you know what, yesterday was just more insanity. We're going to buy the dip, and we're going to just keep buying, push it back up to the high of the day, which would imply it's going up. And this is what I'd refer to as the power of bar by bar analysis, because with bar by bar analysis, where you take each individual bar and put it in the context of trend, multiple time frames, support and resistance, it guides you to what's going on a continuous basis, whether that's a great setup or whether you're dealing with insanity. Because when you're dealing with insanity, it's kind of hard to shift from bullish to bearish. because it just historically usually doesn't work out that way. But in this environment, um, in the advisory letter over the weekend, I referred to it as the Trump effect, as we were talking about the January effect, and January being up and small caps doing well, implying that the markets would be up this year. And I said, okay, great, some kind of seasonality guideline, but what about the Trump effect? And that's what we've been dealing with, this craziness back and forth as things shift sometimes from one day to the next. So prices are bouncing a little bit here, in the middle of the range, and however you want to draw it, whatever tool you want to use to decide where sellers would be. We know where they're going to be, because if you look to the left, you can see that congestion area there. And so whether you're looking at, volume, some gamma, whatever, it's going to lead you somewhere into this area, right? So we're not hung up on exact numbers. So as we look at SPX, shift over to there, and what yesterday's big day, the bottom number got hit, which was 69.20. And to go from here all the way down there is unusual, from a big green day to a big red day. But I always say, hey, look, if you can get on the other side of a whole number, that's the best. But common sense is prices are falling, like the proverbial falling knife. You don't want to get in front of that. And so we were looking at the 50 MA as a possible turn point, because it's followed by institutions as a reference point. And my comment was, they're not going to like it, right, if it closes below that. And we looked for the stabilization, and we got the little pop up there in the afternoon. And you can see the up bar there, but that doesn't change, the way this came down. So you have another void, and if you look at this congestion, this is beyond what's directly to the left there. It's those overlapping bars. But if you look at this from the point of view of, this is where the majority of trading took place. So if we were to put a volume profile on here, I think I put on something to show you today. But if we were to put a volume profile, if we were to put a price profile, what you would see is a point of control would be somewhere around here. So we can eyeball that as we look to where the majority of congestion happens. So looking at SPX, a line in the sand is going to be in this area. Can prices get back above it? And then there's always going to be a cluster of open interest or volume gravitating around the half number. So looking at today's price action, the focus will be, if it can get up to 69.50, that's where sellers should reemerge. And then we'll just see what the price action is on a smaller time frame, whether they can just consolidate there, or they're going to roll it right back over again. Okay. Let's look at our other markets as we do. By the way, today is MT Live, and we'll cover the markets and indices in greater detail. So definitely join us. There's the link. Now, the NASDAQ held yesterday's low, and we're looking at the futures, but a little bit of relative strength. Like, really, Greg? Relative strength? It's pretty nasty looking. And yeah, it looks like it's going to go lower. But again, stay objective. Stay objective. It's on some support here. It's rattling around in this area. And the way it came down, here's the void. And at some point, this craziness will be over, because, look, it's unusual to have a power up day, which creates a void, and then a power down day, which creates another void. But that's the bear sandwich insanity. And I'm not predicting that's going to happen, because the charts don't support that. This is what typically happens after a power down bar. rallies up somewhere close to the middle of it, maybe a minor resistance area, like this low that it sliced through, and then forms a pivot, and then it starts working its way down to some other level. So right now, these markets are just holding their breath. Traders are holding their breath. Is it going to break yesterday's low? We're going to get another down day that sends it down here, maybe to 25,000. The next whole number is a pivot low in the area. It's a pivot low there. So somewhere in here, if we are going to be headed lower, this would be the place to look to see if we get some stabilization. Oh, let's go to the Qs. Outside day. All right. So we were looking at the futures. When you look at the Qs, remember, it started up on the day. The conversation in the morning was this was the better looking setup to go higher because of it came down, it had a strong move up, it had the reversal, and the consolidation. Let's see for 15 minutes here. Here's your volume profile there. Threw it on there just for conversation, but you can see how it going through this congestion areas where it peaks. That's like volume if you turned it sideways and condensed it over a certain number of bars. So this area right through here is where the majority of sellers would look. But you look at this, which is looking beyond to the left, and you look at the way this came down, and you might wonder how the hell could it go through that if that's possible, right? Because there's that void idea there. In any event, right, what we're looking for is staying with basic stuff, and prices are down here. They're not rallying, so no one's jumping on board to run it back up. So far, it's just rattling around, but we just use some basics concepts and say, you know what? Will it stay in the lower 50% of that big wide range bar today, give or take? And even if it rallies up, a roll back over, and you can see where my cursor is, just as a guideline, it works pretty good as a reference point. So far, it's just hanging there. Time is it? All right. So we'll just quickly go through the rest here. You get the idea. Just apply that. This looks pretty good. Well, compared to the others, it looks pretty good. It's not that it looks great, but yesterday's conversation was it had this congestion over here, and it dealt with it relatively well. And you can see where it is. So that doesn't mean it can't roll back over, but sometimes with the other things that are weak, buyers just say, you know what, forget this. I'll just wait to see for things to clear up, and we'll see if this holds it together. But if this can continue to hold here, it implies it's going to go higher. It's looking pretty good. So I see where it is. It's just hanging out here. There's a little bottoming action. Sure, it's got this cluster over there, but if it continues to bottom out, and this, being rising moving averages, it implies that it could get through that resistance. We'll have to see. So we're looking for more information here for determine high probability setups. Here's the Dow, and that was just the biggest mess. Lots of overlapping bars and whips and tails. Nothing more to say other than, stay away from patterns like that. Just looking at gaps here. Let me flip that over. It's just gapping up to the top of the range. It's nothing of great significance going on here. Bitcoin, doing nothing. It's going to make the next dive. And here's the weekly chart. Maybe 70,000, maybe below 70,000. Looks pretty bad. And you wonder how much selling goes on here that maybe filters its way into the broader markets, and we get a little bit of a rout, and a little sell-off, which will create some nice opportunities for us. All right. Ethereum didn't do much better, as you can see. So far, it's just trading inside of yesterday's range. The bottoming tail bar was somewhat encouraging. I think because you look at one individual bar next to a bar, call it a doji or whatever you want. The candle body was in the, you know, open and close was tight there. And so it was like, if it can get above here, there's an unfilled gap that maybe it could rally. But as you can see, there's no interest on the long side in any meaningful way. Oil is doing much of anything. It's consolidating its gain. And that would imply that its buyers are stepping up, this whippy action and thinking it's going to go higher. So that's what we think. That's what the chart supports. Gold coming back, coming back. Nixon going to buy. Texas Instruments going to buy slab. Usually the buyer goes down. The Texas Instruments has been seeing some money rotating into it. All right, so gold, there's the void concept, folks. All right, and it's just been working its way higher. And I'll look at silver and bouncing up there. Looks like, we'll see. The 20 MA is subjective, but look at the little breakout there on the 65-minute. Looks like the silver people are like, that was an opportunity. Let's see what it does. We can keep going higher. Other than that, join us this afternoon at 12 o'clock for MT Live, and we'll cover more indices and internals and so on. Well, you guys, Dan.
Morning. Yeah, we did nail that entry on silver 2 days ago. And Alex and I bought it, but I got out of mine yesterday and it looks higher. I don't have a single alarm going off of our opens or interest items. Let's go. Yeah, slab. Okay, I was gonna have that as a call spread, but if it's a buyout, well, still, if there's juice at 215, the percent that a stock gaps towards the buyout amount is a function of how likely the market expects the closing to happen. So that's up. I deleted a bunch of earnings already, and I posted a list. There's a ton of credit spread ideas. Let's go through them here. AMD. Ideally, it continues to sell off to 210, and then we look for a call spread. I just don't have a bias right now, but whenever I get a big old gap, my bias is to fade in. The CMG was going to be a bear call credit spread. Well, it's still a bearish gap at 38, but now I gotta wait. USAR alarm popping here. I posted that yesterday. You can buy over the high. That looks good. SMCI, it's a bullish gap. That's a put spread idea. Yeah, a lot of credit spread ideas. Mondelez, call spread idea, gapping under a green bar. Now, when I say idea, you got to be in the green room with us because I got to see what it does in the first 30 minutes and then go through the checklist. All right, this one I like as a gap and snap. It's already a climb though. And now it's gapping down another whatever, 20%. That looks great. Put that in a window. Well, I say it looks great. Again, it looks great as a candidate. I'll tell you if it looks great when we hit the buy button or sell put button, but right now it's bearish consolidation. With silver up, I've been watching this HL. It's a buy set up at the 50. It's reversed. Now it's gapping up. I don't think it's going to make a new high, but even if it gets to 26, 27, 28, that'd be a good trade. I'm light. It was gapping a 500, so I had that as a call spread watch. But now it's already $30 off the high. Acmer put spread, yesterday's low. There's any juice down there at 44. EA is a big mess. There was a lot of stocks that had ugly red bars like that into earnings. This gap in $6. That's a pro gap. Let's watch that on a pullback. Zip 73. Gapping under green bar, 30-minute low, call spread. Today's Wednesday, so it would be a 2 DTE. But there's also a lot of stocks now that have Monday, Wednesday, Friday, multiple expirations, which is great for us. 212, big mess. Look how volatile that thing got. You know, it's controlled, volatile. EMR, that's an igniting gap, but excessive. Now, hypothetically, if it were gapping to 153, 154, I'd be all over that 5-minute high. But 161, it's off my charts up here. Into another gap and snapper, putting that in a window. IMTA. Open flat, nothing. Docs 77 and change, big gap, nothing. Although put spread yesterday's low, if there's any juice, Clorox. Before it was gapping under this green bar, so I had it as a call spread watch. Jack Henry 169, and gapping into an ugly bar. If that gives us a bear 1, 2, 3, that looks lower or call spread. IAC is a mess, trying to make the turn, but it's messy. $10, bearish gap of support. SEMO, 90 gap, but excessive. But that is a bull rectangle. Igniting gap breakout, bullish weekly, monthly. But how are you going to get on board? What's your pattern, reward to risk? 69, nasty gap, Voya. I put that in the category of possible excessive. Let's see what it does. After 30 minutes. I mean, sometimes there's a bid down here and we'll come back at 10 a.m. and it's a big old fat green bar, but you have no idea. You have zero idea unless you have the order book of all market participants. Sky, this shows it gapping up to 77. I don't see any prints, but I like that. It's climbing with the 200. 30-minute high idea. Mercy, that's an ugly gap in the middle of no man's land. I mean, it would have to be far away, but it's a condor idea. Crust, big mess. APAM 46, it's a gap breakout, but trade's too wild for me. Unless the put spread. I can't tell where it's opening, Carlisle. But if we do get a 1, 2, 3, then we would have a 1, 2, 3 daily buy setup weekly, so that's worth watching. Opening flat, extended. Now that would have been a good gapping crapper if it was gapping up $5 or more. Lily, big old gap, put spread. Wow, Uber turned positive. That thing was down almost 10%. But let's see if we can get a bear 1, 2, 3. BSX, big old gap, ugly. Man, that's a real company. But that's a nice sell setup with a multi-bar turn. Look at the railroad tracks going down. So that would have been a good pattern had it open flat. Chart yesterday's low. Gap's messing it up, 131. That's a gap and crapper candidate. Big move from 112. So, there's no way I'm going to get to all these, but you all know I emphasize my favorite ones. 340, call spread if there's any juice, but I doubt it. It's so far away. Phillips 66 put spread idea. That's too whippy for me unless you got like a 1, 2, 3, 4. And then you got bullish weekly, monthly, but put spread I liked a lot. You could do it for Friday right here, 144. See under this base. Monster up alarm. Ah, nice. This thing's been dead money for us. Actually, I'll just hold on. Let me reset our alarms. That's a nice gap on the 15-minute chart. Yum. Flat, but put spread under yesterday's low. It's a Tish. Need more data. GEHC is a mess. It was going to be a put spread when it gapped up to 83. But now forget about it. Fox, see if we get a 1, 2, 3. Fox A, same. EFX. It's getting extended on volume, possible wide range ending, but you still got a bearish 15. All right, let me hurry up here. Flex, big fat nothing. Tro 98, gapping down to there. Call spread, but you're not going to get any juice. Bravo Golf, nothing extended. CDW 133. Put spread looks good. Big old gap from that consolidation. CDW, I like. Put spread, $86. Big ugly gap, but excessive. Let's see where buyers step up. I think I have a lot of candidates today. That's opening flat. That would be a fantastic 1, 2, 3. All right, almost done here. Perfect timing. That's extended. That would have been okay. So instead of this one gapping down for a gap and snapper, it's gapping up. So that's still a bullish pattern, but we need to watch to see if it holds here. So all right, so I'm going to get rid of slab. So this could be a 5-minute high. Your stop has to be under this 1910 though, 1920. But that's a nice gap. This is fluid. We use that term fluid. Look, relatively equal opens and closes. No gaps. So 5-minute high. I got it right there. That looks good. EVR almost done here. Gap over a red bar, but there's congestion. See how ARCC is fluid, whereas this is still a put spread. if there's anything at the 340s. New York, wow, that's a nasty gap on New York Times. Does Bezos still own this? That is ugly. All right, IEX, I said I liked. I was hoping for a 1, 2, 3, but alarm went off. I got a couple of alarms going on. Hey, CAG just hit our first target. CAG, I gave the target right there, 1944, when Sam was born at the 200 MA. So now we will move the stop 1878. CAG 1878. Flip alarms here. Q stall, diamonds strong. Apple strong, Microsoft flat, Tesla weak. So what's dragging the Qs down? I guess semis coming in, the video weak. Oh, that USAR is tanking now. So I'll set an alarm at 5-minute high. Make it AMD bottom right. All right, well, it didn't trigger, so I'll just reset the alarm. But I don't, it has to hold right. It's already over 50% retracement, which is not good. I mean, it would still be okay if it triggers, because then by definition, it would be a bottoming tail. But it's just more suspect because of the retracement. F-bin, nice. Let's move stop under this closing bar. 5641. Still third here.